Hey guys, so I wanted to make some comments on this tariff and trade deficit debate between Peter Schiff, who's a libertarian Austrian economist, and Spencer Morrison, who's a MAGA lawyer. I mainly wanted to focus in on what Peter Schiff is saying about trade deficits and tariffs, because I think he really um, gets it spot on when it comes to diagnosing the problem. But I think his sort of prediction of the fallout or ramifications of it go sort of way beyond what's logical and um, he sort of predicts economic Armageddon, which I think is just a bit over the top. So I want to let him speak for himself, and then I'll counter some of the points he's making.
Abuse. If you raise the tax too high, you don't generate any revenue. But let me just give you a quick summary of where we are right now, because the president claims that the world is screwing us, they're taking advantage of us, and by selling us all this stuff. He's got it backwards. We're taking advantage of the world. Now, in the long run, there's a big price to pay. Although Trump may have just accelerated the long run to this year, but here's what's been going on for the last 20 years. Certainly. So we run huge deficits. Government spends a lot more money than it collects in taxes, and doles out the money to the public. The public spends the money, right? But the public didn't produce stuff because this money the government just creates out of thin air. The Federal Reserve prints money. And if we just had to buy what we produce, prices would go way up with all this money chasing those goods. But because we have the reserve currency, the rest of the world is willing to accept our paper in exchange for their stuff. See, normally they wouldn't do that. They would want us to export to cover their export, because the reason you export is to import, right? It's not exporting is a means to an end. You're trying to earn imports. You're trying to benefit from comparative advantage. But we have the advantage of having this reserve currency, so we're able to print dollars and then buy stuff that we didn't make. It cost us nothing to create dollars out of thin air. But the world, let's say China in particular, they need land, labor, capital, all sorts of resources to make all these consumer goods that they ship to us. And we didn't have to invest in the factories. We didn't have to save. We didn't have to deal with the pollution. We just got all the stuff. Now, what did they get? They got the money that we printed. What did they do with it? They bought US stocks. They bought US bonds. Yes, they're building up assets. They're getting richer as we're selling off our cows to buy milk. But in the short run, they inflated our stock market and artificially suppressed our interest rates. So now we think we're richer because our stocks are higher. We get cheaper money because they're buying all our bonds. What we've actually done is we've used the dollar's reserve status to transition our inflation from Main Street to Wall Street. So instead of consumer prices going way up, asset prices went way up. Now, what the tariff
Okay, so first point he makes is that Trump is actually wrong. That we're not getting screwed by the rest of the world. We're actually getting a great deal from the rest of the world, because all we have to do is print our money and export it, and they'll send us goods and services for free. So we can live beyond our means because we're able to export our dollars. We're able to run this persistent trade deficit because other people in other countries want to buy our assets. And then I found it interesting that he uses this analogy that we're selling our cows to buy milk. And my question is, if you're selling your cows to buy milk, who's getting screwed in that transaction? Like, who's getting the short stick there? I personally, I think the person who's selling the cows is the one losing out, because they're losing a productive asset. They're losing something they can make money on in the long term to get something they can consume in the short term. But that consumption is short-lived, whereas the asset has a long-term return on investment. The other point he makes is that, in his view, we've just shifted our inflation from goods and services to assets. But I'm not sure I agree with that, because I think when asset values increase, then it tends to make people feel richer, which increases demand, and that would theoretically push up the prices of goods and services. So I almost see, I kind of see this the opposite way he does. But in any event, there have been studies on a relationship between asset inflation and goods inflation, and there's not there hasn't been found a positive or negative correlation between the two. So it doesn't seem like asset inflation um, leads to a lack of goods inflation or anything like that. So I don't quite agree on that point.
Tariffs are going to do is immediately reverse that entire process. Because by imposing 30, 40, 50% tariffs on Americans for buying prime products, we can't afford these products anymore. I mean, we're broke. We're loaded up with credit card debt. The government is broke. We've already had a big increase in prices.
Okay, so I just want to address this point where he says that we're broke, we can't afford uh, goods and services that we make ourselves, and um, he later he goes on to predict that this will lead to a huge recession or depression. Um, but I think there are a few things to say about that. First, we're definitely not broke. So our net asset position is something like $130 trillion. So that means we have $130 trillion more assets than we have liabilities. So even though we have a lot of debt and we've really increased the asset side of the liability side of our balance sheet, we've also increased the asset side. So we have a lot of liabilities, but we also have a lot of assets. Um, he's right that the trade deficits have allowed foreigners to purchase up more of our stocks, our bonds, and our real estate, for example. But there's two sides to that coin because we also own something like $33 trillion in foreign assets. So it's not a one-way street; it's a two-way street. So as many U.S. assets as foreigners own here, we also own assets overseas that are producing a return on investment for people in the United States as well. One other thing is if we grow our net worth more than foreigners purchase our assets. So let's say if foreigners buy $10 trillion of our assets that is financed through trade deficits, but in the same period of time we increase our net worth by $20 trillion, then we're still better off as a country. So there is an argument that we can kind of outgrow the trade deficits. And at the moment, the trade deficit is not letting us live that far beyond our means. Our trade deficit is about 4% of GDP. It's not enormous, so it's about $1 trillion out of $28 trillion that we produce in GDP per year. So I think Peter Schiff is maybe overstating the extent of the problem here. The thing is, the U.S. is actually a pretty insular economy, and I want to show you a chart on this. So this is the Trade Openness Index. For the whole world, the average is 57.9%. So that's adding exports and imports as a percentage of GDP. The United States is actually the fifth least open in terms of trade in the world, the fifth least open country. If you add together the percentage of GDP that our exports and imports are, it's only a total of 27%. So 11.6% of our GDP is exports and 15.4% is imports. And that's far lower than many other industrialized countries. If you look at China, China's at 37%. So we're at 27% and China's at 37%. So that just shows you that the US is not actually that exposed to tariffs and trade wars. We're one of the least exposed countries to the effects of tariffs and trade wars. I do think it's kind of stupid to, let's say, impose tariffs on raw materials imports or just basic resources like coffee, for example, that we can't produce. I don't see much of a reason to impose tariffs on those sort of things. But I wouldn't say it's the end of the world in any case.
Thanks to all the money we printed during the pandemic and after the pandemic. So what's going to happen? Prices are going to go way up. Americans are not going to be able to buy stuff. So our trade deficits are going to come down because the goods aren't going to come in anymore. But we can't produce them because we don't have the factories. We don't have the infrastructure. We don't have the supply chains. So prices go way up. and retail sales collapse. We're in a massive recession. At the same time, foreigners aren't going to be putting all that money into US bonds precisely when we need them the most, because we've got $26 trillion worth of debt maturing over the next 4 years. We're running $2 to $3 trillion a year deficits that are about to be 4 trillion in this massive recession. And during this recession, there'll be all sorts of bankruptcies. Uh, Companies are going out of business because this whole consumer-based, debt-fueled bubble economy that's been built on the foundation of these cheap imports and foreign credit is about to have the rug pulled out from it.
So again, I would make the case that I think Peter Schiff is explaining the problem really well. The you know why trade deficits are not good, and also why we want more free trade. But I think he's just going way too far down the slippery slope of, this is going to lead to massive recession, and our prices are going to go way up. And this idea that all of our consumption is predicated on this trade imbalance, and that we're all of our consumption is based on foreign imports is just not true at all, because like I showed already, our imports as a percentage of GDP are still pretty low, and we're also the second largest manufacturing country on earth still. So it's not like we produce nothing. We make a lot of stuff, and we live about 4% beyond our means. But while that's not good, and it is a transfer of wealth abroad, it's also not. I don't see the problem to the same extent that Peter Schiff sees it, and I don't see the fallout as being nearly as severe as what he's predicting.
Okay, the whole thing's going to collapsing down.
Okay, Peter, just to correct you, 36 trillion in debt, and let's just give you maybe.
I'm talking about what it means, and what makes that possible are the trade deficits and the dollar's reserve status. So we have exploited the reserve currency status of the dollar to continuously live beyond our means and go deeper and deeper into debt, whereas any normal country would have been prevented from doing this a long time ago. We've been given all this extra rope, that we're hanging ourselves with. So I agree, this is a big problem. We were going to have a day of reckoning eventually anyway. I'm surprised that we've been able to succeed in kicking down the can down the road for as long as we've had. But Trump has not leveled with the American public about the severity of the pain and what is actually involved and how long this process is going to take before there's light at the end of this tunnel. I'm afraid that there's going to be such a bad economic crisis that the country is not going to, they're not going to stick it out, right? We're especially when he promised a boom, and he's going to deliver the biggest bust we've ever seen.
Okay.
So again, I just don't see the basis for this argument. Number one, even if the tariffs go through to the extent that Peter Schiff is saying here, 30, 40, 50%, I don't think it would lead to the biggest bust that we've ever seen. Sure, it wouldn't be good for GDP, and would lead to probably a moderate recession, in my opinion, but it's definitely not the end of the world for us. Number two, any country can live beyond its means by selling off its assets. So you don't have to have a reserve currency to do that. Any country can do it. The question of how sustainable it is depends on how many assets you have to sell off. And we still have $130 trillion in assets to sell off if we have to. So I think I think we've still got a lot of rope left, and we've got a lot of room to continue with these kind of policies. I've made a video saying that I think it's not right, and we should be paying for our consumption by producing things. But I think the idea that this is going to lead to financial Armageddon, the likes of the Great Depression or even the recession of 2008, is a well over the top and not supported by logic or evidence. And I think he just goes too far down that rabbit hole. But I wanted to point out that he's really diagnosing the problem here well. I think he's just I think his predictions are a little too extreme. But anyway, that's all I've got for this video, guys. Hope that made sense and you enjoyed it. See you next time.